Mr. Vinu recently joined the bank. He is basically from non-finance background. He's actually an engineering graduate, and he is having tough time to understand each and every element in balance sheet. And today his challenge is understanding the capital and reserve, its difference. See, capital is basically the amount contributed by the owners as their investment in the business. So it is their direct contribution. Whereas reserves are result of profits earned by the entity. See, when an entity makes a profit, it has two choices. One, to distribute all the profits in the form of dividends, or the other one is to retain the profit within the business or allocate the profit for various purposes. So the business has choice to distribute the profit or retain the profit. When they retain the profit in various forms, we call it as reserves and surplus. So I can say capital is a direct contribution by the owners and reserves are indirect contribution by the owners to the business because they did not withdraw all the profits, rather they allowed profits to be reinvested within the business.